It's Brian Preston, the money guy.
So let's pivot from the work environment, because that was definitely one of those primary cornerstones of the American dream, to let's talk about marriage, because that's definitely evolved, and we've had a lot of movement there. Give me some stats on this, Bo.
Yeah, I think what's really interesting is when you look at how many folks are getting married and when they are getting married, the numbers are really, really interesting. Back in 1960, again, this is data from Pew Research, men got married at an average age around 22 years old. Women got married around 20 years old, and about 72% of all adults were married in 1960. So folks were getting married early, and it was a common thread to get married, to find a spouse and to get married. Well, fast forward now to present day, on average, men now are waiting till age 30 to get married. Women are waiting until average of age 28 to get married, and only about 51% of adults are married. So people are waiting longer to get married or making the decision not to be married or not to stay married. So it looks very, very different today than it did back in the 1960s.
Isn't it interesting that both genders pivoted by exactly 8 years?
Sure, yeah.
I mean, that's interesting to me. And then I also think it's interesting to see the stat of more people were getting married, but here's the silver lining in that smaller number. Because when you see that, you're like, oh, that's kind of sad. But then here's what I think is interesting. In recent years, we found out that there's less divorces. Mm-hmm. So it does appear, because I'm despite what is out there on our YouTube comments, there's a lot of people telling you how horrible marriage is. I actually have found marriage to be pretty good.
It's been pretty awesome.
So it's one of those things where I at least like the fact, if you're looking for a silver lining or turning lemons into lemonade, is that it appears when people, even though they're delaying the decision, it's sticking more. Mm-hmm. You're seeing a lot less divorce, and that's important, because divorce is a disaster if you think about that.
So let's talk about some of the financial implications of marriage. You know, why was marriage an indicator of success, and why was it part, or is it part of the American dream? Well, there are some financial advantages to marriage. We just kind of wanted to go through and list a few. The first is a pretty easy one that most people don't think about until they get to retirement, that when you're married, you're eligible for Social Security, spousal, and survival benefits. Yeah. So even if you get married and decide to have kids, and maybe one of the spouses decide to stay home and they don't pay in the Social Security system, it's structured in such a way that even if you have one working spouse going out and paying into the system, when you get to full retirement age, you actually have a retirement benefit on your behalf based on your spouse's working record. So as you can imagine, for folks in their 60s and 70s, this is a huge income source of money that might not have been there otherwise if this system were not in place.
Just pulling off of my 16 years of tax preparation, public accounting background, I put may on this on purpose, is that you may benefit from an income tax break. Now, look, for years we had marriage penalties and other things, and that was something to pay attention to, because it was a unique thing that two professionals that had equal incomes, it was kind of a marriage penalty. Yeah. A lot of that's been resolved, but there's still a planning opportunity if you have one high income spouse and one low income spouse. There's definitely a benefit when it comes to the tax rates.
Sure.
If you have a big disparity in who makes what within the household.
You know, another benefit is that if you are married, there are additional savings opportunities. Again, even if only one spouse is working, but you have enough earned income to cover both, you can actually do spousal IRA contributions. So if you're putting money in a Roth, even if your spouse doesn't work, it's an additional savings mechanism where you can fund IRAs for that non-working spouse as well.
When you move, I mean, think about your primary residence. If you own your home, a single individual, if they've lived 2 of the last 5 years in their primary residence, can avoid $250,000 of capital gains. A married couple can actually do $500,000. So there's a huge tax benefit when you're talking about primary residence. And right now, with the real estate market being white hot, this is a huge opportunity too.
Another benefit is that there are much more generous gift tax and estate tax provisions for married couples. If you're thinking about passing wealth on to your spouse, it's much easier to do when you're married than if you are non-married individuals. The exemptions are higher, and even the tax rules surrounding how they're treated are different amongst spouses.
Yeah, I mean, there's no gift tax between spouses. You can give on limited to your spouse. So that's something to pay attention to. And then don't forget some of the general insurance coverages. We're talking about health insurance, military benefits, veterans, all those type of things or pensions where your spouse might be eligible for benefits. There's a lot of opportunity there. So we just laid out all the benefits, but what else is going on out there?
Yeah, you said one thing a second ago, Brian, that I think is worth touching on. You said it's divorce rates presently, even though less folks are getting married, divorce rates are at a 50-year low. And you may wonder, well, from a financial perspective, why does that matter? Why is that significant? Well, we know, and this is according to research from the Foundation for Economic Education, that those divorcing experience an overall drop in wealth of 77%. So one of the most catastrophic events that you can go through from a financial perspective is going through a divorce. So the fact that less people are getting divorced now is a positive sign economically because less people are having to suffer through this 77% decrease in overall wealth.
Well, we know just attorneys alone are going to typically cost you around $11,300. That's what the average attorney's fees are for a divorce. And it can, by the way, that's the beginning. It can get a lot more expensive than that. So divorce is just bad all the way around.